Hey guys, welcome back. You're still tuned in to Trading Hour, and let's talk about the big headlines. Zomato is the stock of the day, surging over 10% in the back of its first quarter earnings. Mangalam is joining us now at the big wall to give us a detailed snapshot of how the numbers really looked this time around. Mangalam.
Well, it is a seminal moment and a significant milestone for all the new age companies that have been listed. Zomato has reported net profits for the first time ever. That's the frontline numbers. Let's dive into the deeper details of the numbers and explore what's been driving the success. Let's take a look at the first quarter numbers itself. Quarter on quarter, of course, the revenues have increased by 17.5% compared to close to around 2,056 crores in the previous quarter. And the company has made significant reduction in their EBITDA loss as well. From 226 crores, it's gone down to around 48 crores itself. And as a result of which, the net profit has come in at 2 crores versus 188 crore loss. Now, you'd be asking why, despite an EBITDA loss, has the company made a net profit? Well, here's the driver of the net profit. You have the other income, which is coming at 181 crores. This compares with 171 crores. And there is a tax credit of 17 odd crores. This compares with a tax credit of 16 crores same time in the previous quarter itself. However, irrespective of the bottom line, let's not look at the bottom line and look at the key drivers of the strong operational performance and the fact that, the EBITDA loss has narrowed. The food delivery segment, which is the mainstay of the company, saw an impressive 11.4% quarter-on-quarter growth in their gross order value, reaching almost 7,318 crores. Zomato Gold, which is the company's flagship subscription program, contributed to over 30% of the food delivery gross order value itself. Then the quick commerce business, Blinkit, also saw growth with their 4.6% growth in the gross order value quarter on quarter, but the average order value increased by 11.5%. So more people ordering more from Blinkit as well. Add to that, they maintained a healthy cash balance. In fact, for the first time in the last many quarters, the cash balance has increased from the previous quarter, 11,573 crores. This compares with 11,323 crores. So if you ignore just the bottom line and look at the operational performance, extremely strong. Some key metrics through the following charts. The Zomato contribution margin has increased from 2.8% in the first quarter of FY23 to 6.4%, showing a progressive increase itself. That's not all. If you take a look at the losses in their food business as well, which has turned into a big profit. EBITDA loss same time last year was 113 odd crores and now has jumped all the way to 181 odd crores in the first quarter of FY24. While Blinkit's EBITDA loss has also been decreasing over time from 227 crores, it's narrowed to about 133 crores even as the revenues increase. Now the question, what does the management have to say about their future prospects? Well, they expect the business to remain profitable going forward, and they will deliver 40% plus growth in their top line for at least the next couple of years. And that's got the street excited. Profit or no profit, operationally extremely strong.
Okay, thank you very much for that. Till a year back, we were wondering when companies like Zomato will actually make money. And now that they've turned profitable, I think the next question is how much money can they make? To take this discussion forward, we're joined by Karan Taurani, Senior Vice President, Research Analyst, Media, Consumer, Discretionary and Internet at Elara Capital, to take some questions for us. Karan, thank you very much for that. Add to all this, when Mangalam is telling us the cash balance on the book is so healthy at more than 11,000 crore rupees. Take us through your key takeaways, from the numbers from Zomato, the top 3 takeaways, and the way forward as you see it. What will drive earnings upgrades from here on?
Hi, Rima. Good morning. So I think if you look at the top 3 things, what has happened for Zomato, one is the sustainable growth in the food business. So if you look at the revenue in the food business, that's about 27-28% growth on a YOY basis. So that has come off well. GOV growth obviously has been slightly lower, about 14-15%. But what has happened here is that they've got levers in the form of take rate. Now, take rate could have been in the form of incremental ad revenue, or it could be in the form of increased commission from the restaurants. We believe that ad revenue is a big trigger for revenue growth rates being so high at 27% as compared to GOV, which is slightly lower in terms of mid-teens. That's one broader takeaway, that there is a sustainable growth rate of 25% in the food business, which is a very good thing. Second thing is that if you look at the margin standpoint as well, it's a clear turnaround. I think 1.2% EBITDA as a percentage of GOV has moved to 2.5%. Again, the bigger lever here is ad revenue. And this could potentially increase towards 4 to 5% guidance, as per the management. So we believe potentially the company is well on course to make an EBITDA of close to 1,500 crores 1 year forward in the food business alone. This is a very compelling number. And I think even on the PAT basis, you could see a potential PAT of 1,000 crores plus over the next 1.5 years, for the food business. So I think all in all, profitability looks to be very good. Growth, has kind of stabilized and seems to be reasonable for the food business. But that's not all. I think, these two things will kind of ensure that the valuations remain at 85 to 90 rupees in terms of per share price. The biggest delta has also come from the Blinkit business. So if you look at Blinkit, as a business, I think they've reported a very strong growth, potentially. And this could probably grow towards 60% on a YY basis for the next 8 quarters straight. And they're also guiding for a break-even kind of a situation for Blinkit, which means that the additional lever, for the company in terms of valuation or upgrade would potentially come from Blinkit, because Blinkit as a segment is one segment which is highly competitive, in nature. You've got discounts, the unit economics were not proven. But given the ad support system herein as well, so if you look at advertising also, this has been a big driver for the Blinkit business. So I think putting these major 3 things put together, I think there is a potential earnings upgrade. And
Sure.
I think this is a compounding story now if the execution is on track.
So, Karan, hi, morning, Surabhi here. The thing is, you are sounding a lot more optimistic than your price target. The Elara price target on the stock right now is 102. Just wanted to point that out. And I think the stock today is at somewhere around 90, 95. Let's pull up Zomato as well. It's had a great run. I think the market saw this coming, and the stock has been pricing in this path to profitability over the last couple of months. Let's pull up the maybe the 1-year chart of Zomato. It'll describe that journey. That's Zomato today, and it's firing on all cylinders. Almost $100 already on the stock. Pull up a 1 year. Yeah. So March onwards, the market started pricing this in, which brings me to the point. Your own price target is not too far away from where the stock is today. So then from an investor standpoint, what's the kicker and what's left on the table, Karan? And also tell us, why is it that, you're saying that maybe the EBITDA break-even on the food business that's already priced in, you seem to be more interested in looking at the break-even on the quick commerce, the Blinkit business. Why is that a bigger kicker?
Yes, absolutely. Because if you look at the food business, I think they're operating at a reasonable scale. It's a duopoly market. There is no threat of a new entrant, and we've given the best case multiple for that food business, which is 40 times EV EBITDA and maybe 60 times PE. This is the potential profit that the business could generate. The bigger delta, as I say, will come from quick commerce, because quick commerce was a big overhang. There was uncertainty in terms of how this market will shape up. There'll be further discounting. There are larger players like Jio and Amazon also battling in this market. So I think those concerns are now easing out, because if you look at Blinkit, I think they now are trying to get a recall in the core cities. The strategy is kind of changed now. They're not going across multiple cities. They are trying to deep dive in cities where they have a good inroad and a loyal customer base. So I think these businesses are now all about efficiency, driving frequency, getting advertisement revenue, which goes down to the EBITDA. And you can't forget that, Blinkit has got a big potential for FMCG ad spends. And today in our country, if you see, FMCG contributes, 40% of AdX as far as digital advertising is concerned. So there's a large chunk of spend which is there. And this can be like a very big lever, for the Blinkit business over the medium to long term. So I think potentially the upgrade in terms of share price or valuation will come from Blinkit. As we say, we probably valuing the Blinkit business as 4 times EV sales, which is a very, very low number. But if there is a break even, if there is a potential in terms of EBITDA margin also coming over the next 7 to 8 quarters, you could see a sharp Blinkit business valuations.
I'm so sorry. I mean, we're really racing against time. That's why I'm cutting you off. So sorry for that. But I'm just trying to understand, why are you only valuing the stock at 102? I mean, you're sounding really optimistic. And also at a blended level, EV to EBITDA, what's the valuation multiple through which you get to 102? And why aren't you willing to ascribe a more ambitious target?
So I think in terms of target, why we're being conservative is because, Blinkit as a business, if you see, the management has aimed that they will, try to break even in the next 4 quarters, but there is not much of visibility over there, which is why even the EV sales multiple that we assigned for the Blinkit business is tapered at 4 times. So I think once we move on for the next 2 or 3 quarters and we see the visibility in terms of reduction of losses, we probably will assign a higher multiple for the Blinkit business, which will be a kicker over our target price.
Okay, got that. Karan, we'll leave it at that today. Thank you very much for joining us and taking us through your call on Zomato and where the stock could really be headed from here on. But with that, we do need to slip into a short break. When we return, we're going to discuss the market technicals. Mitesh Thakkar will be with us.